There are two general strategies when it comes to investing your money. I break this up into what I call active investing or passive investing. Now, when I say active investing, I don't mean stock trading. I don't mean real estate flipping. I mean going out and investing in individual stocks, going out and finding individual pieces of real estate to invest in. You're still a long-term investor, but you're going to be more involved. There's more time and there's more risk, but also more potential return. Because if I go out and I invest in the Amazon stock today, well, Amazon could take over the world and I could see my money 10x, 100x. I could make a whole lot of money. But Amazon could also run themselves into the ground and I lose all my money. So you can see how there's more risk involved, but I can also make more money. So when you think of active investing, think more risk, but also more potential return. Think more time and more work. When it comes to passive investing, this is a set it and forget it method. This is me investing my money into index funds or ETFs or mutual funds. This is me not going out and investing into my own individual property. I'm investing in real estate by investing in somebody else's deal. I'm investing in crowdfunded real estate. I'm investing in other passive real estate investment deals. That way I don't have to do the work. I just put some money in and I don't worry about it. This is set it and forget it. Less time, less risk, but also less potential upside. So, active investing, more work, more time, more risk, but also more potential return. Passive investing, less time, less work, less risk, but also less potential upside. Now you have to decide which one is better for you. Some of you are going to say, I love reading financial statements. I love going out and finding rental properties. I love the idea of being involved in my finances. Some of you are going to say, that sounds horrible. I just don't want to have to worry about that. I just want to put some money to work and not have to stress about it, not have to watch the markets, and not have to even think about it. Now, that's going to help answer your question. Do you prefer this or do you prefer this? Or is it a hybrid? Me, I do a little bit of both. I do this and I do this, and I'll show you how in just a minute. But you just have to decide where is the right starting point for you, because this is going to help you figure out what's the next part of your investment. There are two general ways that you can get paid as an investor. You can get paid through growth, which is your stock value going up, your real estate value going up, or you can get paid from cash flow, which is your stock paying you a dividend. A dividend is a cash payment that a company gives you for doing nothing except owning the stock. You can also get this cash flow from investing in real estate. If I go out and buy a rental property and I do it correctly, this property is going to pay me monthly rental income profits that I get every month for doing nothing except owning the real estate, assuming that I have a good manager. That way I don't have to actually work to earn that money. So cash flow is I get paid every month or every 3 months or every year. I get money deposited into my bank account just for owning the asset. Growth is the value of an investment going up. Now you got to find what's right for you. When you invest your money for growth, the benefit is hopefully your money can grow faster. Because if you think about this hypothetically, if you invest your money into a stock and they have $100 million profit, well, if they give all that money away to their investors through a dividend, well, that means that they're not taking the $100 million and reinvesting it back into the company. And so if they're giving that money away, they probably wouldn't be able to grow as fast if they took the money and dumped it back into the company. So when you're investing for growth, they're not giving out that money in the form of dividends, and you will hopefully, it's not guaranteed, you'll hopefully see faster growth of the money. The second benefit is you control your taxes. See, if your stock goes up in value from $100 to $200 to $1,000, you don't pay taxes until you sell. So you get to decide when and how to do your taxes. With cash flow, it's a little bit different. The benefit of cash flow is you have a little bit less risk because you're getting that money today. If you buy a stock for $100 and they pay you a dividend or they're paying you this cash flow every 3 months, well, if that stock goes bankrupt, at least you got some of that money back in the form of dividends. So you have a little bit less risk because you're getting that cash flow. And the second thing you have to think about with this cash flow is, of course, you got to pay taxes. As soon as you get paid, you have a tax bill that you have to think about. Same thing with real estate. When you get rental income, you have to pay taxes. But as a licensed attorney, who is not your attorney, what I can tell you is if you become a real estate investor, you also get some great real estate tax benefits, which allow you to make money and pay less money in taxes. Likewise, when you make money from dividends in the stock market, you generally get more favorable, meaning lower tax rates. So yes, you want to think about taxes, you want to think about how fast your money is going to grow, but you also want to think of what's better for you. For me, again, I don't recommend what I do to anybody else. The bulk of my investments are for cash flow because I like cash flow. I can stack the cash flow from my rental properties. I can stack the cash flow from my stocks. And then I can use the cash flow to pay my bills. I can use the cash flow to pay for my vacations. I can use the cash flow to pay for whatever I want. Now, the reason why a lot of people don't like this is because it's also very slow. But I want to remind you that this is not a 1 year, 1 month, 2 year game. I call it a decade of sacrifice. If you could put in a decade of spending less and earning more so you can invest like crazy, well, that gives you time to stack the cash flow. Because if you start investing for dividends or rental income, guess what? Year one, you're gonna make next to no money. Doesn't matter how much money you invest, it's gonna feel like nothing because you're getting such a low return. Year two, very little return. Year three, very little return. Year four, maybe a little bit more. It feels like you're getting a little bit, but still nothing great. Year five, okay, you're starting to make a little bit of money. Year six, a little bit more money. Year seven, okay, now you're starting to see that you're getting the effects of this cash flow. You're starting to see the snowball effect where the value of investments going up and you're starting to get the cash flow. Year eight, okay, now you're starting to see the benefits. Year nine, some decent cash flow. Year 10, now you have a decent stream of cash flow, assuming you keep investing in money every month over those 10 years. So to really see the impacts of this cash flow, it's a long-term game, but a lot of people don't want to wait all that time. So you just got to figure out what's right for you. Do you prefer the cash flow? Do you prefer the growth? There are three asset classes that have built more wealth than anything else over the last century here in America. Number one, starting a business. Number two, investing in real estate. Number three, investing in stocks. So let's focus on those. Now, starting a business is different, and that's not really an investment. That's more of something you do actively. So I'm going to talk about that separately and ignore that for this video. If we focus on real estate and stocks, now you get to decide what's right for you. And one thing that I like to say is there's a lot of people on the internet that will tell you something along the lines of, if you want to build wealth, you have to invest in these stocks, you have to invest in these ETFs, you have to invest in these index funds and blah, blah, blah. There are other people that say, if you want to build wealth, you have to invest in real estate. You have to invest in multifamily real estate. You have to invest in single family real estate. The reality is that's all a bunch of crap. The people that are telling you that the only way you can build wealth is by buying this specific asset class are trying to sell you a program. The reality is, there are some people that have built more wealth than ever by only investing in stocks, never touching real estate. There are some people that have built an insane amount of wealth by only investing in real estate and never touching a stock. You gotta find what's right for you. Maybe you do both, maybe you do one, maybe you do multiple types of assets, and then you figure out what is the right game for you. So if we reverse engineer this now, let's say you like the idea of investing in stocks. You want to invest for cash flow and you want to be a passive investor. What does that mean? Now you can start looking for index funds or ETFs or mutual funds. These are three different types of funds that will give you cash flow in the stock market. So you go to Google and you search ETFs that will pay me dividends, high dividend ETFs. And then you'll find a few examples. I'll give you one example. I'm not telling you what to invest in, but for example, NOBL. This is an ETF that gives the exposure to S&P 500 paying dividends that are also dividend aristocrats. What does that mean? This is investing in dividend paying companies that pay out that cash flow, that are a part of the S&P 500, meaning they're one of the 500 largest companies in the stock market, and they're a dividend aristocrat, meaning they have paid out and increased their dividend every year for at least the last 25 years. Again, just one example of something that you can consider investing in. I'm not telling you that you need to invest in this or this is a good investment. I'm trying to get you to think how to do that research. Maybe you say, I want to invest in stocks for growth, but I want to be more of an active investor. Now you can start doing more research on what are some more growth opportunities? What are some more growth stocks that are not paying these dividends, that are more smaller, that are more risky, that could see big gains in the future? This is where you can start to do more research. Maybe you say, I want to be a real estate investor. I want to invest for cash flow, and I don't know if I want to be active or passive. Well, if you want to be active, now you're going to go and find properties to buy yourself. If you want to be passive, well, now you can find funds or real estate syndicate groups or real estate investment groups that are looking for funding. If you go to any real estate investor conference in your area, there's always developers and investors that are looking for money. If you find companies online that are looking for investments, well, now you just dump your money into it and you don't have to worry about it. And now you're getting exposure to real estate without doing the work. That's the passive way to do it. Active is you're going and finding the property yourself. See, the name of the game is understanding the systems. But now the whole purpose of you doing this is that way you can invest your money and have the money that's working to make you more money. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.